Hi everyone. So it is no longer news that if you want to grow and build wealth, you need to invest. But what really is investing? Investing is simply putting your money to work for you. And it doesn't have to be a large sum. So it could be $10, $20, $50, $100, whatever it is that you have. As long as those funds are working to give you a rate of return, you are investing because your money needs to grow, you need to grow, then you need to invest. This could be buying a stake in a company that has shares, buying a business, an existing business, or investing in a new business, purchasing real estate or investing in real estate. This could be investing in treasury bills, bonds. There are different kind of investment. But investment simply means, or investing simply means, putting your money to work for you with the hopes of getting a better return in the nearest future. We all grew up differently. We're a product of our environment, a product of our economy, right? So that means we have different personalities, different characters, and different traits. And that's why there are different kinds of investors. There are three kinds of investors. You have the conservative investor, you have the moderate investor, and you have the aggressive investor. There's no one size fits all. No one is more important than the other. It just depends on your personality, your risk appetite, and how you find yourselves. So let's break them down. The first one is the conservative investors, and these guys typically prefer a guaranteed return on their investments. You typically find the older generation guys, the guys that are in their 50s, in their 60s, that cannot take risks, cannot even afford to take risk, right? They prefer a much more guaranteed return on their investments. The kinds of investment that they typically invest in would be, you could say fixed deposits, you could say guaranteed investment certificates if you live in North America or Canada. They could invest in treasury bills, bonds. These kinds of investment gives them a guaranteed return on their investment with little to absolutely no risk. Why? Because at this point in time in their life, they are thinking about retirement. And if you want to retire, you want to retire comfortably. And if you want to retire comfortably, you really do not want to put your money in something that would actually make you lose that potential retirement income. So it only makes sense for them to invest in things that gives them an almost guaranteed return on their investments. Then there's the moderate investors. Typically, these guys are people that focus on a balanced approach. By balanced approach, I mean they focus on a mix between being cautious and being aggressive. So their focus falls between balancing between growth and security. So they want their investment to grow, but they also want it to be secured. Typically, you find people in the late 30s or early 40s fall into these groups or these categories because they try to invest in things like the stock market, for example, which we know can be very volatile, but at the same time, they invest in treasury bills and in real estate, which we know can be very, very stable. Real estate is one of those investments that you know would always grow regardless of what's happening in the economy. It could fluctuate just a little bit, but potentially it has the upside of growing continuously. And you may ask why, but that's very simple. There are three basic needs of the human, literally. Well, you need food to make sure you're healthy, you need clothing to cover your nudity, and you need shelter to relax and recharge and walk towards the next day. And real estate falls under shelter because you need a place to sleep. And as long as demand outweighs supply, or as long as there's continuous demand for shelter, the real estate industry will continuously grow. No matter how small the pace is, but it will continuously grow. That's what the moderate investors do. They focus more on the balanced approach between taking risk and being cautious. Right? And lastly, we have the aggressive investors, right? So these are the fresh out of school guys, I really call them, or the young guys, or the guys that really like to take risk. And the reason why they call them aggressive is because they prefer to take a more aggressive approach in their investing. So we all know that the higher the risk, the higher the rewards. But however, that also means that you can actually lose your funds when you invest them. Now, you find people typically investing in things like crypto. Angel investors that invest in startup businesses, they're not sure what the potentials are, or they know what the potential are, or they think what the potentials are, but they haven't seen the business blossom into something that they wanted to do. But because of the faith and belief that they have for that business, they tend to put a whole lot of funds and investment in that business with the hope that the business will generate a much better return when it becomes one of those unicorns that everyone expects their business to be. The aggressive investors also invest in stock market. The stock is very volatile, so you can find them investing in individual stocks. These are stocks that can go up and down depending on how the market shifts. Another investment that you find the aggressive investor putting their funds to is commodities or forex trading. Once again, these are very volatile investments, but however, they have a high chance of giving you a better reward if your predictions come true. So it's very risky, however, the returns are very high. In a nutshell, it doesn't really matter what kind of investment you do or what kind of investment you undertake. What I'm trying to get you to understand is that you need to understand yourself first. If you understand your personality, your risk appetite, your trait, and your character, and what you feel really works for you, then you understand the kind of investment that fits your need and fits your type of personality. Do not copy others. Don't try and do what everyone does. Why? Because you don't know what their risk appetite is. You don't know if they like to take risks and if they're conversant or comfortable taking those risks. You don't know if they're conservative too. It is good to read about what people have done and see what they've invested in, but until you understand their mindset and why they did that, you should not copy word for word, like for every investment you've seen online. You have to understand yourself and understand your risk appetite because that's the only thing that's going to suit your own model, your intrinsic model. Remember, investing is a long journey, and because it's a long journey, it's best to do what suits you and what suits you only. That's the only way you're going to get peace of mind. All right, so tell me in the comment section, what kind of investor are you? Are you the conservative investor? Are you the moderate investor? Or are you the aggressive investor? And what investment strategies have worked for you? Stocks, bonds, real estate, crypto, angel investing, you name it. Let's have a conversation in the comment section. My name is Nelson, and here I talk about personal finance, investment, budgeting and saving, literally everything you need to become a better person. Until my next video, stay safe and stay blessed. Bye guys.